Welcome back. Not back. Welcome to the
first time on the show, bro.
The inaugural Shock Jock episode of the CORZ Scientific Earnings Call Q2. How many quarters are we into this year, Collins?
Second quarter.
Ladies and gentlemen, the president of CORZ Scientific, Vladimir Putin.
No, we are broadcasting live from a top secret location in Denver, also known as the Block Space HQ.
Bitcoin Mountain, recently dubbed Bitcoin Mountain here
What?
in Denver, Colorado. Yeah, it is.
But
Denver's
Denver's not a mountain, though.
Denver's
Denver's
next to a
plains.
bunch of mountains. Okay,
That's true.
we got 250 people joining us. We got a troll box. We got some comment section. Hit the like and subscribe button. You know what we're doing this for. It is not for ourselves. It's for our children and the people we have to feed. We're going to be talking about CORZ Scientific's Q2 numbers. We got CORZ on the screen. Their live stream is about to start. So you're going to get some really uninformed commentary from the three of us. We'll go through some headlines. We'll go through some TNA. No, we won't do that. Just kidding.
No.
We're not going to do that.
Q&A.
Q&A, not TA. Q&A. So if you do have questions, feel free to drop in the comment box. Also, if you are brave enough, we have the ability to bring in guest callers. So you can throw your voice on screen or even your face. Hit us in the Mining Pod DMs on Twitter to be able to be brought up on stage. Almost got 300 people in this. Drinking CORZ for CORZ. Thank you, Tom. Be careful, Tom.
Not quite a CORZ, Tom.
Tom is known as Trollbox Tom. He's been known to make a few people feel bad about their portfolios. They're probably bad already, to be honest, because he knows what he's talking about.
The one thing I've been wondering this whole time is what exactly are they weaving over at CORZ? Like,
How long have you been waiting on that comment?
I've been sitting on that one for a while.
Is this turning into Kill Tony?
I don't know.
And it's not Kill Tony. This is also brought to you by the official water of Mining Mafia, Topo Chico.
Well, for Mining Mafia, you're claiming it for Mining Mafia, not for the Mining Pod.
Will, why don't you pull up the minute or the second chart?
But Topo Chico, if you do want to sponsor,
the BTC mining stock guy loves that Apache mining water, whatever.
Yeah,
so it's like
Aquapana.
Yeah, it's a little inside joke there.
I wonder how far can we zoom in on the CORZ Scientific chart? Can we get the one tick so we can do by the tick?
Yeah.
Maybe we have to upgrade our TradingView subscription.
You know, if people subscribe and sponsor the podcast, you can get better data here. We are on a shoestring budget. Okay, we got Anthony in the chat saying CORZ. Yep, there is CORZ.
So Eric, go back to the chart and zoom out on like a year.
Yeah, zoom out. It's always good to zoom out.
Okay, let's actually let's do an actual.
Yeah, so just like look, this is a. I mean, like CORZ is just such a Cinderella story. I mean, I hate to like fanboy over them. I'm not really, because I'm not,
You kind of are.
I don't hold any CORZ, and I've actually like specifically like avoided it post bankruptcy because I was worried about what they were going to do. And you can look at that chart, you can just see that they've just recovered spectacularly over the last year after emerging from Chapter 11.
They have.
And a lot of that really is the AI news, and I think that's really going to be the biggest thing for their. Not just for these reports, but also just their 10Q for this last quarter, just seeing where they're at with their partnership with CoreWeave. Specifically considering they're going to basically retrofit some of their current centers for hosting CoreWeave's GPUs. So
FYI, if you hear in the background, there's some jackhammering in the building we're in. So hopefully that isn't any foreshadowing for the stock price. Hopefully it's only green and up from here. But there is some construction in the building. So if you hear that, apologies.
They're building basement dwellings for the team because we have to. Bitcoin's back below 60K. So
every day we go to work, we want to be going up.
We do. We really do. In terms of disclosures, I do hold a little bit of CORZ. So I'm really hoping that Adam announces something cool, something big. I think they're just going to go through numbers. We are still waiting on them to start the live stream. So if you're wondering why we're yapping still over here, we're yapping because Adam hasn't started going yet.
Yeah, we do technically, if you see here, we do have the live stream pulled up here. Anyone can just join this.
If you want.
It's a public link. You can watch it. But I actually don't know very much. I'm going to throw this question to you, Colin. I don't know very much about public earnings calls. as I've never watched the full one all the way through without falling asleep. What is a public earnings call? For I would say there's 400 people watching this. Like, I would imagine not every single one of them watches earnings calls. Like, what is going on
Really
here?
quick, we got a thing from Penny Ether. He says, quote, they already started some HPC revenue and EBITDA wrote off some cost of those revenues. HPC startup costs. Wonder if that's the CW payback part or not. Nah, seems too big.
Penny,
actually.
get a mic and get up here, man. We'd love to have you on to
Penny,
talk about some stuff.
feel free. We can keep your face off screen. But let's go back to the other
Yeah, Colin,
question.
what is an earnings call, and is it super entertaining?
Yeah, wow. I mean, is it super entertaining? I can think of a lot of things I would probably rather do, but
Hey, don't scare away the audience. We got
no, earnings
400
calls are
people here.
great. They're the best thing ever. You should, take your family to them. Take your first date out to them. You got a Tinder date. Tell her that you're gonna sit down and you're gonna live stream an earnings call. Maybe you play a little Fortnite while you do it. Who knows?
This guy's not too excited about this earnings call.
But so
he has no exposure to CORZ.
Oh, no, I don't. I mean, ultimately, it's a chance for a company to reach out to its investor base and its shareholders and basically kind of give them an update on where things are on a quarterly basis. And they're obviously important for basically expounding on certain metrics and operational touch points for this company in particular, and for Bitcoin miners. To be frank, a lot of it is like chest pounding about expansion plans and how many ASICs they have on order and how many megawatts they're going to build out and all of this other stuff. So they're definitely helpful, but sometimes it's going to be hard to really figure out what's worth paying attention to, because they're obviously selecting what they're showing you. The real meat from these earnings calls is in the filings, right? Like if you just go in the 10Qs, the numbers don't lie. Right, and where the money's going and what it's being spent on is clear. So, but yeah, I mean, and long and short is just an earnings call is just that. It's like gives the quarterly rundown on how much money the company's making, what they're spending their free cash flow on, what their liabilities and debts are, how they're raising money, whether that be from debt or equity, things like that. So,
and when you give all those numbers, Core Scientific has one of the most interesting stories over the past 2 years in pretty much all of those categories, from debt to spending money on things.
Yeah, let's get some headlines
to
up.
disclosures. Can
you grab some headlines from last year? We'll go through those while we're talking. There's 420 people now in the chat, 421 to 422. Okay, so if you are watching this for the first time, Mining Pod is the longest running Bitcoin mining podcast. Go give us a like, a subscribe, follow us on our YouTube channel, drop a comment, and if you are bold enough, feel free to jump on this call. We are taking call-ins. Please just don't be weird and Zoom bomb us. That would be unfortunate. We are here to talk about the Core Scientific earnings for Q2. We already had the Marathon and the Riot ones come out. Those are the only ones so far, right, Colin?
Yeah.
Yep.
And
so
CORZ is the third one.
CORZ is the third. I guess they're the biggest miners, so maybe they have the biggest IR teams. That's why they get them out the fastest. Who knows?
I don't think they're the biggest miner anymore.
No, the three of them. Riot, Marathon.
Oh, they're the three biggest.
CleanSpark is technically second biggest, I think, by market cap now. But maybe that's why they're getting them out faster than, say, your other Hut 8s of the world. In terms of this Core Scientific stream, what are we actually thinking is going to happen, Colin?
Who do we think they're going to draft?
Yeah, I don't know. I mean, I think it's going to be like, at least from the mining front, it's going to be what we've seen already with Riot and Mara. It's just you're going to see their revenue getting crushed, obviously, with the halving. Like it's the first month after it's the first quarter after the halving's taken effect, right? So
that's a good point. Let's bring up hash price.
Yeah, I mean, it's pretty brutal to look up right now. It's under $40 per petahash per day.
All-time lows in terms of hash price.
I think all-time low is at 35 at this point. Yeah, so we're at 38. We're basically at 39. But so you're going to see that obviously from the mining side. But I think the big thing really is just what's the game plan going to be going forward for this for their CoreWeave partnership. Like they've had press releases about allocating, hundreds of megawatts to CoreWeave I'm really curious to see if they have any updates on exactly what that looks like. How are they going to furnish, those needs that CoreWeave has for infrastructure for HPC and AI? Because I was under the impression up until recently that they were leasing out a tier 3 data center in Austin for HPC and AI stuff. I don't know if they're still doing that, but it seems like that's not the route they're going to take in terms of long-term strategy for this. They're going to want to end up owning their own infrastructure. Sorry,
You're good. You're drifting away from the mic, and these jackhammers are going to ruin the audio quality.
So this brings up, because we do have Tom Mossier in the chat. I believe he was the one who coined the term mullet miner. Is this true?
Somewhat fake news. I believe it's
he didn't coin it, but he popularized it.
Okay, popularized it.
We're still waiting on Core Scientific to begin the stream, by the way. We might file a complaint.
And we are still taking odds on whether or not Adam will be wearing a penguin vest.
We got a nice line from the stream. Good afternoon, fellas. I'm a long-term holder of CORZ. Got my first 43,000 shares at 45 cents average. I added another 18,000 shares. Now I'm holding 62K shares. So you got a lot riding on this, Ronald. I hope that today goes well for you.
I am.
You want to see up and to the right.
Up and to the right
good for you, Ronald.
We hope you're not going back to McDonald's. For this one, we are going to be just talking about hash price a little bit more. As you mentioned, Marathon and Riot. Marathon had negative $200 million in, what was it, net earnings?
I don't know if that's totally true.
So we got the fact
We're
checker
gonna look
on
that
there.
up right
I wrote
now.
about this earlier in the week for the Mining Pod newsletter.
So
you think I'd remember?
Yeah, so Mara had a net loss of 200 million.
Yes.
And Riot had a net loss of 84 million. It could be worse.
It could be worse. And why is that? Why did they have a net loss? Also, there's 511 people watching now. If you are enjoying this, go and subscribe to the Mining Pod. Hit the like on our YouTube channel, this stream, or just subscribe to us. We are the longest running Bitcoin mining podcast, 3 years now, and we're doing some live stream stuff with Bitcoin mining stocks. So if you enjoy this, come chill with us. Drop in the chat, Colin. Why they have such bad times?
Why they have such bad times?
Why such bad times?
Because hash price down bad. But no, part of it is because of the fact that margins are just totally compressed after the halving. But part of that is also because they're like writing off like certain depreciation, right? On operations and stuff like that. This is something that you can see in their there's all sorts of games that they can play with their financial reporting, and you can see this in their adjusted EBITDA as well, which is why it's not really a useful metric. But
can you go into that a little more?
Well, with adjusted EBITDA, it's like you can now, if I'm understanding this correctly, and someone might correct me in the chat, but you can basically like take Bitcoin gains, like use them to like offset depreciation and stuff like that, and like make it look like income that you didn't actually realize. But with regards to depreciation in general, miners will write off ASIC depreciation and depreciation on other assets for their operations. That will just kind of like give honestly a skewed perception of how much they actually lost, right? They didn't lose that much money, but like on the books they did. So
a lot of financial games and twists and backflips.
Yeah, that's why like a lot of this stuff is like such kind of like bullshit to come through, because it's just it's all of this financial jibber jab and reporting bullshit.
This has been a common theme for the mining mafia and a lot of the mining equity stock analysts out there, is like, what metrics do you actually pay attention to? Because I think if people forget that the idea of hash price as a metric that we track is only a few years old, as it was like tracked by, I think, Luxor's hash price index, your alma mater.
Especially like in terms of it being more popularized like last 4 years or so.
Exactly. But now, we don't just look at the net profitability, the profitability of a unit of hash rate. Now we look at these things are into these, they work, we got to consider the holistic enterprise value. We have to consider a bunch of different metrics, and we can't just look at like total hash rate deployed or even hash cost, what metrics do you look for, Colin?
I mean, I think there are just a number of different metrics that you want to be juggling. I think BZ, Brandon
Bailey.
Brandon Bailey's second gate advisory.
Yeah, I think he had a really good point that you really want to look at. I mean, like EV by, I think he said EV to megawatt ratio is one that you want to look at because, you know, at the end of the day, miners are infrastructure plays. They're expending massive amounts of capital to build out huge industrial sites with the aim of consuming electricity for a specific purpose, whether that be Bitcoin mining or AI down the road and general data center stuff. So like EV to megawatts, and just also how well, you know, your revenue per megawatt. How much are you actually turning your megawatts into legitimate revenue? And then also profit on the other end, right? Because you could have, to your point, you could have a miner that has a crap ton of hash rate, like Marathon, for example, but their power rates are terrible. And so their margins are pretty bad.
While we're sitting here and waiting for Adam to begin the Q2 earnings, let's just go over to the Miner Mag and go through some stories for this week. The biggest one that, you know, this kind of popped on Twitter was Iris Energy, seeing electrical spike to $61,000 per Bitcoin, jumped 56% in July. You can go to theminermag.com and over there and read this. We're not affiliated, but they are good friends.
Friends of the pod.
Friends of the pod, as we like to say. So, quote, U.S. listed Bitcoin miner and data center operator Iris Energy experienced a sharp rise in electricity costs in July, exceeding $60,000 per Bitcoin. That's a really high cost. You couldn't run Nakamoto on that, could you?
No, and we once tried and it didn't work. So
Yeah.
no, I would not recommend that. But I mean, look, I mean, this is a grid tied power rate, and what's Iron? Is it mostly wind?
I believe. Wait, Irene?
Is like a lot of,
Irene
like,
has basically
wind, and
two
solar.
larger sites. They're mostly, you know, renewable based energy.
Was this? Yeah, I didn't actually read this article. Is this because of
Carbon
the
credits.
carbon? Is it because of the variability in renewable energy costs?
No, I believe that they just set their hedge wrong. Is what I've
Okay.
read. So it's hard to know about a lot of this information. So we can go through this a little bit more. The 56% cost increase compared to June was driven by higher energy hedge pricing at its Childress, Texas site during the summer. Iris added that unlike previous periods, the energy market saw lower volatility, reducing opportunities for energy trading that previously helped offset costs. So they went up to 8 cents per kilowatt hour, which is not great.
It's terrible right now. You're
especially
getting
for
murdered.
difficulty.
And unless you have an S21 or M60, you're getting slaughtered at that price.
And that's compared to, I believe, like 2-cent power average that they had last year. So they definitely got dinged on this. And then we have seen their share price tumbling for the last few weeks. Of course,
Don't worry, AI will save them.
AI will save them.
no one's cheerleading.
It'll help them hedge better.
No one's cheerleading on the stock price going down. But okay, we are about to click over to 600 concurrent viewers. We're at 599. So, there you go, 600. So if you're watching this, go and give a like, a subscribe, or whatever to the Mining Pod newsletter. Follow us on Twitter, etc. We are waiting for Core Scientific to start their live stream, and then we're going to get some colored commentary.
They're almost 20 minutes late. Maybe they're still searching for Jordy. Jordy, whatever is Montez. Yeah, if Jordy Montez could please come to the entrance.
Please move to the entrance.
Please move to the entrance. This is an insider joke from the Trump speech at the conference the other week.
Yeah.
Just so we're not crazy.
Okay, we will depart from Iris Energy as we continue to wait for CORZ live stream to begin, and we'll go over to this other one, Rhodium. Are in the private mining market know-how. I can give color on this one if you guys are not familiar with it. But
color it, please. This is a spicy one.
Yeah, so I'm gonna give facts and color here. So Bitcoin miner Rhodium in distress amid loan defaults. Rhodium seeks $67 million in damages from riots, Windstone, and arbitration case. TLDR in this. Again, this is from our friends over at the Miner Mag. Feel free to go subscribe to their newsletter, their Telegram channel, and their website. Rhodium Enterprises has essentially 2 sites. One is tucked away within the Riot Rockdale site, and they've had some sort of like JV agreement with them for a while. I don't know exactly how they would term it, but they've operated that site along with Riot. And then they have their own private site. But they have had quite the issue ever since they failed to go public about 2 years ago. Actually, the same time that CORZ went public, which didn't end up that well either. Rhodium chose not to go public, and they had a lot of issues. Loan defaults. They've been trying to work with creditors to fix this situation. It has not gone super well, and now it's heading to arbitration. On the backside of this, Rhodium has been in arbitration with Riot over access to its site, the amount of electricity they want, energy credits that Riot has been picking up. And there's just been a dispute back and forth, which, again, goes back to your common Bitcoin phrase, not your keys, not your coin, not your ASIC, not your Bitcoin. So I think when you come to agreement like this and you see headlines like this, it's oftentimes because the contract wasn't fleshed out as well as you might think. Even though they had world-class access to some of the cheapest energy in Texas, they are looking at a possible default on loans. So.
And this is a point I like to try to make, which is that even though it can be a bull market, somehow you can still be losing money somewhere. Because it's not just that simple of plugging a rig into a power source. There's many, many knobs to twist and turn here, which can affect the long-term profitability of your business. Like, this reminds me of the time when in peak 21, where a lot of people built out energy, pre-ordered ASICs to be delivered at a certain time, and had they been delivered at the time, maybe they would have made money. But there's like a bunch of other things leading up to actually plugging those in to make it work. So, man, my heart goes out. I can, for every public Rhodium story, there's 10 other more private ones which don't make the news.
To be fair, Rhodium is private to this day.
No, yeah. He just means
the story is public.
The story is quite public. Okay, well, we're still waiting.
I think I have this conference call lined up. I don't think they've gone live. I've been refreshing the page to make sure.
Otherwise, people have been wasting their time with
this. If you somehow see the stream, or if you somehow see the earnings call stream on your screen, let us know so that we're not like missing it.
Is this not wild? There you go. There's the full shot. There's 636 of you in the chat. If you're enjoying this or not, even if you're not enjoying it, feel free to subscribe to the channel, like, etc. We might try to keep doing these because they're kind of fun for us. Just kind of break up the monotony of Bitcoin mining news by jumping on a live stream. And we're gonna have the troll box going. If the share price goes down, we'll make fun of people. If it goes up, we'll celebrate. Maybe pop some bubbly. Who knows? Kind of make this a little Sports Center-esque.
Just remember that they will be training LLMs on this troll box sometime in the future and back testing it so they can. When they say they're incorporating AI, they actually mean they're using LLMs to pump the stock price. I'm totally just kidding, just so we're all clear about that. We talk about AI. You interview a lot of people about AI on the Mining Pod, which is interesting because it used, a year and a half ago, this was not really a part of the mining beat. Even as far as a year ago, it was not really as much of the mining beat. But now it is like suffocating and sucking all the air out of the room about like the mining landscape. And so it's just my personal observations that's caught a lot of us like me who have not spent the past few years devoting ourselves to understanding the business of AI compute to have to like to like figure out how to produce mental models which are productive for commentating on these things. I don't know, Colin, what is your take? Are you where do you fall? Do you have any strong opinions or are you still in the
on the AI horse race?
Yeah, AI horse race.
You should DJ while we're waiting for the live stream to start, dude.
I don't have my stuff plugged in, but
I mean, it's like every technological leap, and I think an easy analogy will be probably like just the general internet and tech boom. It's like this is obviously going to change everything, but it's a matter of like who are the actual serious players and who aren't. I don't understand it nearly enough. I think the most interesting thing for me about the whole AI and HPC thing as an intersection with Bitcoin mining is hash rate's a very liquid commodity, and as much as you can deliver it, directly to a mining pool and basically get paid a market rate that is pretty tight across all the different pools. There's not much variance between what you're going to get paid out from one pool to the next. Bar unless you're doing like Ocean Pool or something with like a payout that's not FPPS, or if you're like trying to deliver directly to the blockchain and just get paid out based on your own luck, you're going to get paid a set rate for your hash rate across all these different pools based on hash price. How does that work with HPC and AI compute? How do you value a megawatt that is being leveraged to produce HPC, compute in a data center that's clustered with a bunch of other ones versus one where it's 100, 200 megawatt data center, gigawatt data center that's massive? That's kind of my biggest question, and one that I really would love to explore more with some Bitcoin miners and some other folks on like the mining pod, is specifically, what do HPC and AI data markets look like? How are people buying and selling that compute? Why is some compute valued more than others? Because that's going to be key for understanding which Bitcoin to this, right? Instead of the ones that are just like, yeah, like we have like 200 GPUs at one of our sites, and it's like, is that that? How good is that on the market? Is that, what's the latency for, delivering that to the end user? Do those few seconds mean they don't want as much as the one that's a little bit faster? I feel like I have no idea about,
And it's all like project. I look at the mining business. I can, and it's like where it's going. Whereas AI, you have very range of opinions about where AI fits in the future. Even among like seasoned industry participants, and you have very differentiated business strategies where, in Bitcoin mining, you just can't go wrong with the simple meta of get a lot of hash rate on at the lowest real cost of production as possible. Like that's a very clear meta that we know how to evaluate that and the success of that as a strategy. But it's not very clear to me how to evaluate like different data. Is a data center on the West Coast, the same thing as a data center on the East Coast for AI compute? Because I'm not even sure about that.
Yeah.
But it is, if it's Bitcoin mining, they're roughly equivalent.
Yeah.
You just look at the power rates.
Yeah, for sure.
Nick says to pedal harder.
Pedal harder.
Nick should join the call.
Nick, you should join. Also, I'm pretty sure you mean PEDDLE. Unless
the stream started getting a little whack there for a second. I think my Chrome browser started freaking out, but it's doing better now.
Oh, the Wi-Fi?
No, we're plugged in. We're plugged into Ethernet. I think it's this Chrome browser.
Well, I tell whoever's running the stream over at CORZ Scientific earnings call to pedal harder.
Yeah.
Because we are now closing in on half an hour late. Jordy,
to be fair, I saw 2 times. I saw a 2:30 Mountain Time and I saw a 3 p.m. Mountain Time. So
okay,
I think there is some sort of miscommunication there, but that's okay. We got to review some information. Talking about Bitcoin mining stocks, there are now 700 people in this chat. Thanks for joining us. We might just keep doing this every earnings call, except for the Bitfarms one, because Ben, you put it at 8 a.m. Eastern, and I'm not waking up for that.
No.
So next time you want coverage, man, you put it at a reasonable hour.
It's like 5 a.m. for me, man.
I know, it's ridiculous. These mining stocks, they're all retail floats, and then they put something. Maybe they have bad news coming out. Just refresh.
Refresh. Adam is already answering a question. Okay, thanks for the comment. Let's see if we can find this. I do not see this stream.
Someone send us the link.
Okay, let's see. Let's see if we can figure out
We
where
just missed the
we
entire
just
earnings call.
we just shock jock the whole thing.
There was a good chance that this would happen.
Okay.
Adam is already in it. We got 700 people, depending on you guys, to figure this out.
Bro, I don't know. This boomer platform does not work for me.
If it wasn't practicing my earnings call, I would be there. Anyone got a link to CORZ call?
Okay,
There.
drop those links to the
Line
course
call.
calls in chat. we're at this stage now.
Well, chat, we're being actively rugged. We are trying to refresh and get this going, but we'll see what happens next few minutes.
What is going on here? Press play to begin.
Oh, here we go.
Oh, so their own platform isn't working?
They've released some information. We have their numbers now. That's nice on that earnings webcast. Here we go.
That's what I'm on.
We're kind of being rugged by Core Scientific. Not gonna lie.
Wouldn't be the first time.
There we go.
Oh, there's no video. Okay.
So we
Good
are.
afternoon, everyone. Adam and team, great job on the execution.
We apologize for being dumbasses at
My first
MindPod.
question
We
is
had it
also on
muted
the expansion
for quite a while.
of the
But
HPC
we'll jump into the
site
call now.
portfolio, and I wondered, Adam, if you could maybe comment just on the
I was
general
I was
kind of
excited to see if
competitive dynamics
what they were
in that
wearing.
market today after what you have done. Who is competing with you in this in the site selection, and in terms of like the next couple of sites, how quickly do you think you might be able to execute something? Thank you very much for your perspective.
Yeah, thanks, Lucas. Thank you for joining. As we go through processes on some of the larger sites and some of the broker processes, the folks that we're competing with are the likes of Equinix, Digital Realty, et cetera. And so those processes can get expensive at certain times, and that's really why we're focused on I would call it a different set of assets. What we're focused on are both greenfield and brownfield opportunities. For certain data center companies, they're not interested in touching brownfield opportunities. We have experience converting brownfield opportunities not only from a data center perspective, but also a Bitcoin mining perspective. You look at our portfolio today, we have 3 sites in there that are brownfield conversions. So we have the experience, and we believe we are carving out a niche in the site selection process that will provide our company very interesting opportunities. And those opportunities aren't only great for us, but these are opportunities that are very interesting to the potential clients that we're speaking with.
Thank you very much. My second question is regarding leverage. Adam, Denise, how do you think about kind of the proper leverage ratio of this business after what happened? You touched on it a little bit earlier, but I would appreciate how you think about that. And then is there any sense of urgency to make changes to the balance sheet as it stands today? Would appreciate your thoughts. Thank you.
Absolutely. Our objective with our capital structure is to create something that balances the risk of the business with the future growth of the business. Right now, we essentially have Bitcoin credit risk, and as we look forward to 2025, it's a much more stable credit risk business. And so we feel very confident that there will be opportunities for us. Obviously, the 260 million conversion of the convertible notes, that's an incredible milestone for us as a company. And we've almost cut our debt in half since emergence. And we've cut our debt by over 60% since the beginning of the year. So, we're in a process right now of making sure we are going to have the right securities on our balance sheet. There's not urgency around that. We feel very comfortable with where we're at from a capital structure perspective today. But as we look forward, that perspective obviously changes. And so we're evaluating all opportunities that are available to us. And those opportunities are going to continue to expand as we start to see more of our sites come online.
Adam and team, I really appreciate it, and keep up the good work.
Thanks, Lucas.
Our next question comes from Joe Flynn with Compass Point Research. Please state your question.
Hi, guys. Thanks for the question. I was hoping you could comment on the remaining options for the 112 megawatts of data center capacity. Just like what ultimately has to be achieved to get those signed, whether it be like finalizing designs or securing items in the supply chain. And could you maybe just comment on continuing conversations with diversifying the customer base? Thanks.
Thanks for the question, Joe. What we're looking at today, and the one point I'll make a note on first is, we're obviously very close discussions with CoreWeave, just recently executing the 118 megawatts this week, which is another great milestone for us as a company. The next 112, working through finalized designs, working through all the necessary items related to that. And we're still in discussions with other clients, and I think that's really a key point here is that all of the work we're doing to prepare and negotiate with CoreWeave on these last 112 or 118 megawatts, that all directly relates to the same type of design and diligence that would be required for us to sell that site to somebody else as well. I think on the client diversification point, that's really important. That's really why we're so focused on our site selection right now. We want to be able to make an offering to a number of clients who have differing needs, differing size needs, differing location needs. And part of what we're going through right now is ensuring that we are building a portfolio that is attractive to these end clients. And so that's why we're very aggressively pursuing sites today. And that's going to provide us a really interesting opportunity for the remainder of this year to diversify our client base, which is one of our key catalysts.
Thanks. That's helpful. And I was wondering if you could comment on reports about delays in Blackwell shipments, and ultimately it sounds like the contract starts on delivery of the data center, but if that could ultimately impact kind of timing of deliveries. Thanks.
We're obviously keeping a pulse on where Blackwell pods are in the delivery process. This is something that we're working very closely with our end clients and even potential clients on to ensure that we're delivering facilities alongside of schedules of when there's going to be the deliveries of those GPUs. So it's hard to comment today about where the deliveries will end up in 2025 and 2026. And really right now we're focused on continuing to execute and deliver these facilities as quickly as we possibly can for our end clients to have the optionality to turn on as quickly as those GPUs are delivered.
Thanks for all the color.
Thanks, Joe.
Our next question comes from Brett Knobloch with Cantor Fitzgerald. Please state your question.
Hi, guys. Thanks for taking my question. Maybe to start on sourcing new sites and locations. I guess, can you maybe just provide some color on the supply and demand imbalances out there for energy, and I guess what you're seeing in terms of not competition for the same sites, but going out and adding additional sites, you have to have a view that HPC demand is only going to continue to increase. So I guess how tight is the market out there? I don't know if you can quantify it or anything qualitative would be helpful, but I guess how tight is the market out there for power?
Thanks, Brett. The market right now is tight, and it's requiring, I would say, expertise in the site selection process. The interesting part about the process we've gone through over the past 7 years locating sites for Bitcoin mining is we're using a very similar criteria in terms of what we're looking for on the HPC side. So we've been able to locate sites, and we're in the process of working through those negotiations on sites that will provide us, or that are, I would say, a more interesting opportunity for us from a pricing perspective, because it is competitive. On these large sites, even on behind the meter, that's another part that is extraordinarily competitive today amongst the hyperscalers. And so, those are some processes that we're involved in, but isn't necessarily the main focus for our site selection. We're looking at a range of different sites, a range of different states of those sites. And I think that's really going to provide us the most amount of value here. And that's really just given our experience working with utilities, working with local governments, and all of those things over the past 7 years that we've worked through on the Bitcoin mining side are aiding us greatly in this process that we're going through on the HPC side.
Perfect. No, that's helpful. And then I guess when you're talking about different locations and regions across the U.S., are you looking at a site with, I guess thinking this site could be used for training or the site could be used for inferencing, or is it all one of the same for you guys? Or are you like primarily looking at maybe like very low 1-2 millisecond latency sites?
And our focus is mainly on low latency sites. What we're seeing right now is a pretty major shift, or we believe there's going to be a major shift going on in training versus inference over the next few years. And so when we are locating sites, we want to ensure that they have the opportunity to do both. We think that's important, not only for the longevity of the site, but also for the longevity of the client's health as well, having the optionality to switch between either application that they're utilizing the site for.
Awesome. Perfect. Thank you guys. Really appreciate it.
Thanks, Brett.
Our next question comes from Joseph Vafi with Canaccord Genuity. Please state your question.
Hey everyone, good afternoon. Nice to see all the progress and thanks for taking my questions. I guess first one is, on Austin, you're generating HPC related revenue there now. I know it's still early days in this journey, but be interesting if you could share some of your learnings to date out of that facility in this new line of business, and potentially what and how it may be kind of helping you plan and get ready for larger deployments. And then I'll have a quick follow-up.
Perfect. Thanks, Joe. The interesting part about our team is many of our team members actually sat in this facility when they worked for HP. This exact facility sit in very similar places in the office. So we had high familiarity with this site. Some of the learnings that we're going through is, I would say, both on the client side as well as on the newest generation of GPUs that are coming out. Some of those requirements are different than the historical data centers that have been developed over the course of the past 20 years. And we've been integral in the design process and working with not only our end client, but also NVIDIA on what the design is of these facilities. And that's aiding us in the process as we work through the designs on the future conversions that we're working on today, the next 382 megawatts. So you're absolutely right. There are learnings with this newest generation of GPUs, both from a cooling perspective as well as a latency perspective. And all of those things are going to aid us in this conversion process going forward.
Great. That's good color. And then if you also, I know it's early days here on these block 3 nanometer chipsets, but maybe you could remind us here on, why you find these attractive. I mean, there's clearly a lot of good, miner solutions in the market, and maybe a quick hint into how you see them performing, relative to the rest of your fleet when they're deployed. Thanks a lot.
Our objective is to build our future facilities with lower CapEx, have lower maintenance costs, and we're really focused on developing the next generation of Bitcoin mining infrastructure. And so as we were evaluating the type of opportunities that were in the market, we realized it was much easier to design a facility around a hash board than it was to design a facility around a machine. And so as we look forward to what the future of Bitcoin mining looks like, we recognize that form factors were going to continue to evolve over time, and we're going to be at the forefront of that evolution. And that's something very unique to CORZ Scientific. We've operated over 16 different manufacturers in our facilities, over 700,000 machines. That provides us very unique insight into not only the operational process for machines, but also the repair process. Our repair center would be one of the largest repair centers in the country if we were just a repair business. And so that's something that's very unique to our business. We have a very unique insight, and we're trying to be on the forefront of this industry. And I think people are going to be fast followers to where we're going right now.
Great. Thanks for those comments, Adam.
Thanks, Joe.
Our next question comes from Darren Aftahi with Roth Capital Partners. Please state your question.
Yeah, thanks for taking my questions. First, I guess, just diving into site selection a little bit more. Can you talk a little bit about your source of referrals? I know you said local governments and utilities, but I'm curious about that. And then, would you guys ever look at maybe subscale legacy data centers as an option? And then I'm also curious if this is primarily domestic exercise, or if you guys would look international as well.
The way we look at it right now is there's really two avenues for growth. One is brownfield and greenfield opportunities. The second is something that you mentioned, the subscale data centers. I'm going to touch on the second one first here. We have been looking at a number of different existing data center opportunities similar to the deal that we did in Hibbets. I think going forward, one of the things that we're looking at more closely is acquiring those sites and finding data centers that have excess megawatt capacity on the substation that will allow us to continue to increase the capacity of that facility. Just given that power densities have increased so rapidly, we have an opportunity to bring a lot more megawatts into a traditional data center. And so that's something that's very attractive to us right now, given our experience already retrofitting existing data centers. When we talk about working closely with utilities, local governments, that's just something that we've done over the past 7 years in the Bitcoin mining side. And we've formed very close relationships with all of our utilities. And we think that's really important. I would say over the past 7 years, Bitcoin mining has come in and out of favor with governments, with local communities. And really one of the things that we've tried to highlight is that we try to be great community citizens in every jurisdiction that we operate in. We try to be great partners to our utility companies. And all of that has paid dividends as we've started. That's something that's opened a lot of doors for us, just given how good of an operator and how good of a community citizen we've been in each of our locations.
Great. And then just as a
Did
follow-up,
that guy just ask for like
you guys laid out and
industry competitor knowledge?
curious, obviously you laid it out there, so you feel confident in it. But if there was to be slippage in that, is there any penalty to core scientific if you don't hit those bogeys? Thanks.
This is something where we work very closely with CoreWeave on the timelines. We share in our execution risk in terms of getting the facilities and the materials on the site as quickly as we possibly can. So it's less of an issue from a perspective of penalties. It's more of an issue of us ensuring that working together with CoreWeave, we're able to source all of the necessary items. But we've worked really hard to ensure that we not only have our plan A on supply chain, but also a plan B and a plan C. And so we have all of those lined up, and we're excited and confident in the timelines that we've laid out today.
Thanks.
Thanks, Darren.
And a reminder to our audience, to ask a question at this time, press *1 on your telephone keypad. To remove yourself,
You can't do that in our chat, but you can like and subscribe to the Mining Pod.
*1. Our next question comes from Rosemary Sisson with Odeon Capital. Please state your question.
Yes, hello everyone, and thank you for taking the calls. Just had one thought on your expansion, which sounds really interesting from the HPC idea with brownfield and greenfield expansion. The question comes to mind is that I'm just curious as to whether you feel that you have enough infrastructure in your current state to be able to support that. It sounds like it would take a lot of people with expertise in order to effectuate that kind of a strategy. And I don't know, I think the other caller asked something about whether you might be thinking about going globally or not. You didn't address that, so I'm assuming no. But just the question arises: can you, first of all, your expertise in a house is very important to keep, and to keep happy, but also, how do you look at expanding that in order to facilitate your growth?
Yeah, thanks for the question, Rosemary. And just to go back, we are looking at international opportunities as well. It's not just domestically. But as we look at our team today, we're set up to execute on additional projects in 2025 and 2026 above what is currently contracted. So we feel very confident in that. Now, that doesn't mean that we're not looking to add, very specific talent to our bench. And so that's a process that we're going through today. And what we've been very lucky in is the fact that, we have a great story right now. We're on the leading edge of both Bitcoin mining and HPC infrastructure, two of the highest growth industries in America right now. And so we've been very fortunate to be able to attract talent to our company who want to be a part of our story. And so that's something that we've been finding, I would say, easier to attract talent to the company. And it's something that really excites us is the fact that we've been able to add additional bench strength even over the course of the past 3 months to just help aid in the execution process, not only in the first 382, but also on the future sites that we're looking to acquire.
That's great. Thank you. And internationally, where would you think about expanding?
Our objective right now is to work with the potential clients that we're negotiating with domestically to locate in areas where they'll find they have attractive opportunities for themselves with their end customers. So it's hard to speculate on where we may go, but we're looking at a number of international markets that we think will be very attractive long term, not only for existing potential clients that we're in discussions with, but also attracting and finding new potential clients as well.
Okay, thank you very much.
Thanks, Rosemary.
Our next question comes from Kevin Deed with H.C. Wainwright. Please state your question.
Hi, Adam. Thanks for having me. Hi, Denise. I'm not sure that you really peeled back the onion on the locations that you're working to convert. And I understand the first, actually it's a second 200 megawatt extension with CORZ. You committed 80 megawatts to power that. I was wondering if you could offer a little detail on location and additional power you might need in support of HPC.
Thanks, Kevin. One of the points I want to emphasize first is, there's a competitive advantage for us right now. We're leading the market in terms of contracts signed this year for HPC, for AI, and we're looking at potential expansion opportunities at some of our sites as well. So where we believe we have a competitive advantage, we're not necessarily trying to give that edge away. And so we're working diligently with local utilities. We're also looking at potential expansions within the markets we're currently in as well, given the existing relationships that we have. So, we feel like we're in a very good position. And when the time's right, it's hard to speculate on when, but we will be announcing the locations of the places that we are converting from Bitcoin mining to HPC.
And the power required to supplement the additional contract extensions that you've announced since the second one, I guess, the best way to phrase it, Adam. Is there any more detail on that you could offer?
Kevin, I just want to make sure I understand the question. You're just saying what the total power necessary to service the additional 112 and the additional 70?
Exactly. Yeah. I would assume that the 16 is all in Austin is all set. You don't need additional power there. But in developing these other locations, obviously you're going to need the power to support them.
Yeah. A great way to think about that is when we talked about in our investor day about the 700 megawatts needed to service the 500 megawatts to the GPUs. So a great way to think about it is about a 1.35 to 1.4 PUE that's necessary above what's contracted from a GPU megawatts perspective. And so if you're trying to calculate, kind of back to the envelope math in terms of what the total megawatt need is, And that's a great metric to use, kind of multiplying the number by 1.35 to 1.4, depending on the location.
Okay, fair enough. Thank you. Could Denise or yourself help me with understanding the cash generated from the warrant conversion? What sort of trends have you seen, and what would be fair to expect?
Yeah, Kevin, so thank you for the question, Kevin. We saw a very minimal impact to Q2 from the actual exercise of our tranche one warrants. And so, you'll actually be able to see that, coming through from a balance sheet perspective. But we've actually in the last several weeks seen the conversion of about 35 million of our tranche two warrants. And as you'll remember, those are penny shares. So no significant cash flow. So we really haven't seen the 670 million that we talked about associated with our tranche one warrants to date. But we do have some movement, and we will continue to see some of those roll in, but they're not significant as of yet.
Okay. You mentioned 30 million and 35 million added to the share count,
Yeah, so
Denise?
Just to kind of put things in perspective, Kevin, we ended the quarter with about 183 million shares. Where we sit today, as of the end of last week, is at 258 million shares, as we mentioned in our prepared remarks. And that's primarily driven by the additional conversion of our convertible notes, or the mandatory piece that was about 40 million shares. And as I mentioned, the exercise of our tranche two warrants added about 35 million shares.
Thank you. Our next question comes from Jack Chan with Imperial Capital. Please state your question.
Thanks for taking the question. Wanted to ask on the expansion opportunities, will you be looking to do deals with these future customers at the same economics as your CoreWeave deal, or are different structures being contemplated, and if so, what those could look like?
And thanks, Jack, for the question. The contracts is something that's actually, something that we're working through today in terms of how do we structure these and have the right give and take between the buy down of CapEx versus the rate that they pay. And so we're working through that based on both the credit risk of the potential customer, as well as what the length and tenor is of that end contract. So we're working through that today. So obviously the CoreWeave deal was extraordinarily unique. It was something that completely changed the data center industry from a terms perspective. So we're obviously using that as a starting point, but I would say we're expecting the contracts to change based on where we are going forward, our ability to access the capital markets in different ways to make the potential new contracts that we're signing more efficient. And so there's a number of opportunities for us, and we're exploring all of them.
Thank you.
Our next question comes from Lucas Pipes with B. Riley Securities. Please state your question.
Thank you very much, operator. Thank you for taking my follow-up question. Just really quickly on slide 15, you show application-specific data centers, kind of 1, 2, 3, 4, 5. Would those be all at different sites, or might there be an overlap? And should we think of those as kind of, call it ASDC1, an 80 megawatt cluster at one of the facilities? Just wanted to clarify that. Thank you very much.
Yeah, thanks, Lucas. A great way to think about this is more on a facility level basis, not necessarily on a site level basis. So it doesn't necessarily mean that it's spread across all different sites. It could potentially be across different facilities at specific sites.
Okay, so essentially it's a different 1, 2, 3, 4, 5 is at different sites, but it may not be within one building. It might be several buildings.
Yeah, you're absolutely right. And we do have multiple sites at some of our sites, and so it's a great way to think about. It's more on a facility level basis. Those ASDCs.
I appreciate the clarification. Again, best of luck.
Thanks so much, Lucas.
Thank you. And there are no further questions at this time. I'll turn the floor back over to Steve Gitlin for closing comments.
Thank you, Diego, and thanks everybody for your questions and for your attention today. An archived version of this call, all SEC filings and relevant company and industry news can be found on our website, corscientific.com. We wish you a good day, and we look forward to speaking with you again following next quarter's results.
Thank you. This concludes today's conference.
Well. If I can find the right button. What the hell? Okay, we're here.
Back.
We are back. We still got 884 of you guys. Stick around. We're going to go through these notes with our expert, Colin Harper.
He was totally taking notes, weren't you?
Colin was taking notes. But yeah, let's go through some of these things. There's a CSLK Clean Spark one tomorrow as well. So we're going to boot up the old live stream and see if we can do something similar. Let's go through some of these numbers. I'm going to pull up the press release right now, and then we're going to kind of go through them. The biggest thing to me, of course, was the net loss on the quarter was significant compared to some of the other miners have already put out the numbers.
804 million.
Yeah.
Basically 805 if you're rounding up.
Nick Hansen of Luxor Mining says, sad the biggest miner would be better off just turning their machines off. That's a tough one, Nick.
Many such cases.
They'd have no revenue. Yep. But as Penny Ether also points out, it's all about those warrant liabilities. So if you've been paying attention or if you've invested in CORZ Scientific over the last few years, you'll know that they went public through a SPAC deal and then they had some problems. They went through Chapter 11. Out of that Chapter 11, their new CEO, Adam Sullivan, emerged. He restructured the company. They put out these tranche warrants. I believe there's two types of them.
Yeah, and I want to like point something. I want to circle back per what Anthony said. Like the $800 million loss that they posted for last quarter, 700 million of that is related to warrants getting getting basically marked to market.
What
I don't want to because I'm going to mess it up because I literally just looked at that and I haven't like had a chance to look at everything, so I don't have everything. So I don't want to like try to explain it more than I understand it. But basically, it's just there are a certain amount of warrants that are getting repriced based on the fact that CORZ price has been ripping recently, and that's leading to part of the reason why they had an $800 million loss. So it's not like they're actually losing that much money. It's on paper.
Yeah, so we can look at some of their numbers. Generated operating income of 6.6 million, a decrease of 2.9 million over second quarter 2023. It produced an adjusted EBITDA of 46 million. Contracted 382 megawatts of infrastructure to host high performance compute. So part of that was the CoreWeave deal, which was announced yesterday. We can go back through that later. And the potential revenue for that 6.7 billion over 12 years. Can you really price that in, Colin?
And Penny over here bailing me out. Thank you, Penny. The warrants are like IOU shares. When share prices go up, they owe more money. But actually, it's just shares they'll pay out. So a lot of these warrants were used when they were emerging from Chapter 11 to basically pay down debt. They converted debt into shares, into some of these warrants. And per what Penny's saying just now, obviously now their share price is worth more. So they have these share. Hey, can you guys pay attention?
We got to pull up the chart. This is the live stream. Keep rolling, Colin.
Okay.
Keep rolling.
Anyway, shares are worth more now. So now that debt that they converted into shares which have not been issued yet are now, there's worth more. So technically it's money that they owe, but it's with CORZ shares. So
gotcha. Okay, yeah. So we have 950 people here. Colin is trying to explain tranche warrants to the rabbit brains of Charlie and Will. It's not going super
I don't
well
understand them, so I'm not the right person to tell y'all what they are.
You're doing better than us.
I'm just here for funny quips.
Literally,
I have no actual insight to mining equities.
This is my favorite line though so far. Nick Hansen, CEO of Luxor. This is a bullish loss. We got Penny Ether again in the chat talking about it. The warrants are like IOU shares. When share prices goes up, they owe more money, but it's just their shares pay out more. I got Nick Hansen again. I've got a few people chiming in here. Warrants get marked to market based upon stock price, and stock was up huge. The carrying value of them increases on your books a bit. A liability, not an asset. A little struggle with the typos there at the end, but I think I understood what Nick was trying to say. One more explanation from Anthony saying warrants were mandatory as part of the secured convertible notes going to creditors. They were forced to take shares, which brought in millions to the company and helped cut the debt in half. Yes, it's dilution, but it might be better than just selling an ATM offering.
I think it's important, again, just to highlight the fact that this came from the restructuring, came from their bankruptcy proceedings. And it was a way for them to shed a mountain of debt that they had, because they had an absurd amount of debt.
They did. And so, okay, we have after hours pricing for CORZ right now, and it's down around 3%. I think it drops as much as 6%. I think we were kind of watching while we were answering some questions there. Adam was answering some questions on there. Yeah.
Wow. It looks like we may actually be affecting. When the price was going down, when
we talked it right back up.
The price was going down when we accidentally had the stream muted, and as soon as we started talking again, it started going up.
Adam, if you're listening to this, consider a sponsorship. We just saved your market cap millions of dollars. No, after hours, obviously a little more volatile. Not much is going on in terms of like people actually doing anything. You have to wait till the next day, their brokerage account. This is not great looking, but I do think it is a bullish loss in the terms of they have an HPC contract that's expanding with CoreWeave. CoreWeave is the darling of the HPC AI world right now. There's been a lot of great interviews with them, so go check those out. I think one of the better ones was with Nick Carter and Castle Island Ventures. And so I think that HPC thing is a big deal. Penny also called out that they want to be seen as an HPC data center company, not a Bitcoin miner. And I think, maybe there's a geopolitical thing here. If Kamala Harris starts nuking some of these Bitcoin mining sites in the U.S., little strategic rocket launches.
I think there's just bigger capital pool. It's just like if you're just pivoting to be a trad data center company, you're going to have access to more opportunities in terms of being able to pool capital, attract investors. The implications are much larger.
Yeah.
And also, this isn't that surprising considering a lot of CORZ management comes from traditional data center management.
Traditional. Yep. If you've been to their sites, I've been to one of their sites in Texas, and it's pretty sick. I'm not gonna lie, it was very big. And I don't know where their HPC sites are going to be, but you can see the thinking makes sense for them for the mullet miner solution versus some of these other miners. So they did talk about this in the chat in the stream quite a bit. That is, they're going to convert a lot of their existing Bitcoin mining to HPC AI. And that works for them because they went through Chapter 11. They didn't build out a lot of their sites. So they're basically just concrete, and they're just going to be able to plop the AI part on top with this CoreWeave deal. We just hit 1,000 concurrent views on the stream. If you are enjoying this, go like and subscribe to the Mining Pod. We're the longest running Bitcoin mining podcast. We also have a newsletter. Check us out at the Mining Pod on Twitter, on our YouTube channel, etc. The number keeps going up. That's a good thing. Anthony Power is in here as well. This is actually positive as the warrants get converted. Cash will flow into CORZ and the debt is repaid, and providing additional cash runway. The issue is, when will shareholders convert? I'm not sure what the last part. They shareholders have until January 2027. Okay. So people like Anthony who are in the spreadsheets day in, day out know this a little bit more than we do.
We're just here to provide color commentary. Think of us more like sportscasters for this new era of incredibly dry financial reporting and quarterly statements. Because again, yes, I know how to mine Bitcoin. I don't know how to talk about companies who mine Bitcoin. So this is why we have the Collins on the team who spent a little more time staring into the abyss that is the spreadsheets. We have tomorrow the Clean Spark. Tomorrow we've got Clean Spark, I believe in the afternoon, North America time. So I guess we're gonna run this back tomorrow, are we?
I think we're gonna run it back.
Probably gonna have to run it back.
If the CORZ team is watching this, we're sorry for not getting the audio right at first, but that's what you're working with when you're working with the mining.
But you have 1,000 more viewers of your earnings call.
We got a lot of people on the earnings call. Okay, we are going to close it out here. We got a few more things in the comment chat. That's okay. We'll close it out. We're gonna do this tomorrow. There's the Clean Spark I believe it's 4:30 Eastern. So we're going to try to boot that up as well. Go like and subscribe on our YouTube channel. We'll be putting that there, or just our Twitter account, and we'll be pushing it there as well. Anything else from you boys as we kind of close out?
I just want to say that Nick said, how do we feel about 26 million SG&A? Seems reasonable. Marathon's SG&A was 61 million for the last, or that's Marathon's was 57 million for Q2, and Riot's was 61. Considering CORZ size, that seems pretty reasonable. Anyway, I don't know.
We're getting some hate from Nick in the
I don't know if that was hate. That was a nice kind of like, that was nice fodder for conversation.
Oh, okay. I don't know if I can confirm this, but there is some chat of a CORZ Scientific exec being interested in joining us next time. So we might, if we really get our
Can we get Adam on now?
If we really get our stuff together, we might be able to.
This was very impromptu. This was cooked up 3 hours ago.
I think if we had all the time in the world, we still would have done it the exact same way. So this is us live commenting these earnings calls off the cuff. We may add some curveballs into it. We toyed around with this idea of actually playing.
You can't
tease it.
You can't tease it.
Okay, well you'll have to watch next time just to see what our crazy minds concoct to add as background.
Maybe I'm being mean, but I think we should keep that in the back pocket.
Okay. But, whenever we need views.
One last kind of like final thought thing too. Per what you said, Penny, about the revenue potential with HPC for CORZ, absolutely. That's just the biggest question, right? Can they actually pull it off? Can they convert these data centers that have been used for Bitcoin mining into HPC AI stuff? So
also, Ben Gagnon, if you're listening to this by chance with Bitfarms, please feel free to move your earnings to a few hours later. We'd love to cover it tomorrow, but I can't do 6 a.m. I'm sorry. So, okay. From all of us at the Mining Pod, go like and subscribe. We are the longest running Bitcoin mining podcast in existence. We will see you guys on the flip side. We're scrolling for some exit music. Nice. There you go. We'll see you guys later. Peace.